Hello, welcome to the European Open briefing for Wednesday, April the 5th. I'm Rafi Barajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing most major pairs relatively steady. We're seeing a bit of a rebound in currencies such as the euro and the Aussie from yesterday's lows. The dollar, though, is mostly flat as investors are waiting for some key risk events, mainly the FOMC meeting minutes that are due to be published later today, and of course that all-important summit between the US and Chinese presidents tomorrow and Friday. Plus, of course, we have the non-farm payrolls as well on Friday. But there is still some risk aversion as well apart from those events from the North Korea, who fired another ballistic missile. So that's raising geopolitical tensions and also affecting currency markets too. The euro is just a little bit firmer this morning. It was boosted from another French presidential debate on French TV yesterday, where Le Pen's chances continued to fade, at least based on the polls. And in other notable movers, the Canadian dollar is, although it is doing a bit better today, it's still struggling considering the firmer oil prices that we're seeing over the past couple of days. Moving on now to the dollar yen pair, we can see the dollar yen touched a 1-week low just above the 110 level yesterday. It's currently trading a bit firmer around 110.67 at the moment. As mentioned, North Korea fired another ballistic missile, and this seems to be a deliberate move just a day before President Trump and President Xi are due to meet for the first time. So a lot depends on the outcome of this meeting, as the two leaders will be discussing trade policy as well as North Korea, of course. And we will wait and see whether or not the meeting will be a friendly one, and whether it will be an opportunity for the two leaders to ease some friction, mainly on trade, as the US is accusing China of unfair trade practices. But also to be watched is the FOMC minutes. We've had quite a few Fed speakers since that March meeting, so we're probably not going to see anything too substantial out of the minutes, although of course we'll see, investors will still be watching for any clues about future Fed policy. And Friday, there's going to be the all-important non-farm payrolls report. Another strong report would increase the odds of a rate hike at the June meeting. Yesterday there was some support for the dollar out of the US numbers for February factory orders, as well as better than expected trade figures as well. Moving on to gold now, we can see gold actually rose to a 5-week high, $1,261 announced yesterday. It's come up with those highs, though it's well supported above the 1,253 level. As mentioned, we still have some risk-off sentiment in the markets. That's also benefiting the yen. The yen has moved off yesterday's highs, though. But not too much. We had some data out of Japan earlier today. The services PMI for Japan rose to a 19 months high of 52.9. That's up from 51.3 in February, and that pretty much confirms the recent data that suggests that the Japanese economic recovery is getting off to a very solid footing. Looking at the euro now, the euro has been pretty much range bound this week. It's currently slightly up on the day at 1.0680. Yesterday did touch a 3-week low of 1.0635. There was much stronger than expected Eurozone retail sales numbers for February. That did provide some support, but also we had another French TV debate about the presidential race. Although Macron did come second, Le Pen did even worse. She ended up fourth, according to the polls taken right after that debate. The leftist candidate Jean-Luc Mélenchon actually was the winner after the debate, but nevertheless, the latest debate does kind of confirm what we're seeing from other polls recently, that Macron, that the first round will be most likely be between Macron and Le Pen, and meaning that if Macron goes through, he will probably beat Le Pen in any second round. Let's move on to the Aussie and the Kiwi now. Both currencies have been moving in similar fashion, pretty much. The Kiwi was doing better yesterday, but it's doing worse today. The Aussie appears to have rebounded much more strongly this morning. Yesterday, the Australian dollar did come under pressure after the RBA. Although they kept rates on hold, they were a little bit more dovish than what was anticipated by the markets. The governor, Philip Lowe, said that he wants to see more improvement in the labour market before the central bank can be confident about growth in the overall, growth in the overall economy is strengthening. So that suggests that the RBA will likely keep rates on hold for longer than expected. And if the recent tighter lending curbs have positive effect in restricting house price growth, we might even see a rate cut potentially, especially if the labour market doesn't improve. The New Zealand dollar, the reason why it's not doing so well is because at the latest dairy auction yesterday, we only saw a very modest rise in dairy prices. They were up by just 1.6% in the latest auction. And we're seeing the Aussie struggling at around 0.6980 against the US dollar. The best in commodities, oil is one of the better performers. This morning it's up 0.7%. US crude is back about $51 a barrel, and that comes after there was a bigger than expected drawdown in US crude stocks yesterday, according to the American Petroleum Institute. The official government data is out later today, but also helping oil prices is we had unexpected outage in North Sea production due to repair work, so that's boosted oil prices. And there's also growing hopes. It does appear that OPEC, non-OPEC countries are complying to that oil agreement, and that even though it's taking longer than expected for the oil market to rebalance, there's a bit more confidence lately that it is starting to take some effect. But despite that, the Canadian dollar hasn't been doing so well this week, and the reason for that is we had weaker than expected trade numbers for Canada yesterday, where exports fell by 2.4%. This suggests that first quarter growth in Canada will be rather weak. We've got a Bank of Canada policy meeting next week, and this data suggests that the bank will probably remain on an easing bias. So that's been pressuring the loonie, although it is doing a bit better this morning given the continued rise in oil prices. USD CAD is currently trading around 1.3388. And a quick look at today's economic calendar, we can see it's going to be a fairly quiet day. The main focus will be the UK services PMI. There's been some signs of weakness in UK growth, so a weak reading there would probably pressure sterling. We're also going to have the ISM non-manufacturing PMI for the US, as well as the ADP national employment. The ADP employment report is seen as a good indication of what the NFP report will show on Friday, so those will be watched. And also a quick mention that the FOMC meeting is published at 19 hours GMT. That's it from me. Thank you very much for watching and have a great day.